Welcome back, and joining us on the show now is Peter McGuire of Exim Australia. Peter, hi, good to have you. And the markets are reacting to the China financial policy meeting that was on 30th and 31st October. And the second thing is the US Fed meeting that went by yesterday, where the markets do believe that there perhaps is one more rate hike, but this one clearly was on as per the street expectation. How have you seen both of these impact the base metal as a sector?
Well, good afternoon, Manisha. I think a couple of things. First off, the China situation, I think everyone's inhaled that and taken on board the news and the appreciation of it all. And as far as Fed was concerned, well, it was 99.9% chance of no chance of a rate hike. We'll just sit and see where Fed Chair Powell moves over the next couple of months. And as far as base metals, they're still languishing. There's no great breakouts there. And I've still got copper at, that 8,000 to 8,100 sort of number. I'm just not seeing a lot of movement in the short term, Manisha.
Peter, the fact being that while, of course, the last couple of months have not been so great when it comes to metals, November at least has started slightly on a positive note. Copper, as you mentioned, we've seen levels below 7,900 as well. So at 8,100, Would you say a bottom is done? Would you be confident going out and buying into this one?
Well, I think so. I mean, that 7,900 handle, Manisha, I think it hit everyone with a little bit of a surprise, and that was probably oversold in a lot of ways. So I would say that it's certainly, the floor, and from there, yes, you could see, relatively a little bit of a kick up here over the next couple of months leading into, Lunar New Year for the Chinese. So, but I do think that, we've seen the bottom as far as prices, because this is really a very depressed market at the moment as far as price, and I feel as though there's more upside than downside.
And would you say the same about zinc? Because we're trading at a one-month highs here, especially after the Night Star shutting down those couple of facilities.
Well, exactly. It's running at about 2,500. Had a bit nice run up around about 3% on the LME, and I think that was a nice, very strong move. So yes, the fundamentals are there. There's probably more upside. You've just got to be, market specific. I think some will shoot better to the upside than others, and some are languishing. And, I look at the others, it's been fairly strong, but, even aluminium's still sitting at that 2,200. So it's well off its highs. And, I think we're seeing, the bottom of those sort of markets.
All right. And how would you look at the iron ore prices at a 7-month highs with supply disruption concerns coming in from Australia, and a Citi report suggesting that $120 is not too far away now?
Well, exactly. I mean, they've had a nice time up as far as, price, and you've got to be, if you're a miner, you have to be relatively satisfied with it. They all want more, but, at the moment, they're probably that 120 handle is very much on everyone's radar. Industrial action and a few other things are certainly a concern from the Australian side. And overall, the consumption phase, I think, is, relatively strong as far as buying. So, probably stronger than where we are at the moment. Price-wise, a little bit of a a kick up from here.
But do you think 120 would hold? Because there are various reports also suggesting that a fair value for iron ore perhaps is below 100, even 80 for that matter.
Well, this is the issue, Manisha. I mean, it's going to be choppy and volatile. And so, whilst it can get up there, how long is it going to be up there? It's a little bit like the crude market, where everyone is 95 and then all of a sudden the wind's taken out of it. Same with gold a little bit, but, at least gold's holding well. But, that's what the choppiness of those markets are all about. They're, they're volatile, and it's always a look, in retrospect, you can always tell, that was the price action. But before you look into it, you've got to take on board the fundamentals and, and from a demand picture as well.
Peter, the interesting thing is that while, of course, we're looking at macro data and the US Fed reactions are already into prices, but each metal seems to be having a stronger fundamental playing for it also. For aluminum, for example, you have the China Southern Province, which is dealing with dry weather. Hydropower is what they use the most. So we are looking at production getting curbed there as well. For aluminum as well, do you think there are more supports now on cards?
Well, I would think so, Manisha. I mean, it's been oversold in a lot of ways. It's really languished at that sort of price of 2,200. And where it used to be around that 3,000 to 3,500 sort of handle. So it's been very heavily sold off, and I feel as though it's probably at the bottom end of the market. So there's probably plenty of upside from here, in the sense of 2,600, 2,700 is achievable. but it's just, it might be a rising boat, or a rising tide carries all boats, and all of them get a bit of a leg up,
Okay. Our final question then, Peter. I get that. Until the end of this year now, Peter, if you had to pick up a metal, where would that be? Is it going to be a precious metal, an industrial metal? Where do you see the best of trade coming in?
I'm still very focused on precious, Manisha, and I think that gold's got, we've got 2 months to run, and I think that with the decoupling with yields as far as gold's concerned, I think gold's best days are again going to be ahead of it, and I won't be surprised to see, prices up from here by end of December.
All right, so all bets on gold there. Peter, as always, thank you so much for joining us.